Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, April 6, 2020. Take a quick look at some of the trade ideas on the site. The earlier video today, we took a look at the markets, showed you some key Fibonacci retracement levels, overhead resistance levels, support levels below. We looked at the leading sectors, the top weighted sectors in the S&P 500, and then we looked at the market leading FAME stocks. That's FAAMG plus I is Intel, the sixth largest holding. And so most of those at the time were either at or are just below some significant resistance levels. So I'm going to go over some different things here, trade ideas, but we'll just do an update on the market. And again, a level that things I might not have talked on in that other video is QQQ has bounced back to that key level. Remember, we had this level right about 180, 195 or so. I have it there, 194.81. You can move that line up or down a hair either way. And it's a pretty significant resistance level back in 2019, last year. QQQ had made several runs up at that level, rejected each time, had a little consolidation, and finally punched through it. And you remember on the way down, that's where after a little brief momentum fueled overshoot, that's where the market had consolidated, even mounted a pretty strong bounce that day. From that low there, it bounced up about 6%. And that's kind of what we're seeing today is just run-of-the-mill action. That's what the new norm has been since about this point right here, 5% up and down days. And so you really can't take much from the scope of the move, but we certainly want to watch some levels. I don't know if you can make them out here. You have a couple of key moving averages above that are rolling over, turning down now. You have the 200-day in red exponential moving average. You have the 200-day simple moving average in blue right here, so I'm turning it up. You have even some shorter term, faster moving averages coming on down. And this is tech. It's been the strongest sector. Now, QQQ is mostly tech stocks. So right now you have in play, if we get rejected here, you're going to have the first death cross in a while on a key pair, the 50 and 200 day, using the 50-day exponential moving average. But you can see the 200 exponential and 200 simple come in around the same levels. So you want to see that, watch for that. In fact, I have that on a trend indicator. Let me show. Okay, this shows the up top. You have the 250-day exponential moving average, the 50s in blue, and the 200s in red. And so when they cross over, that's what you call a death cross. When the faster moving average crosses over the slower moving average. And what I've done here, created a custom histogram to just visualize when that cross happens. When this histogram goes from green down to this brown color, it should be red, but whatever. That shows that the lines have crossed, and the higher the reading on the histogram, the farther apart those two lines are. So it's just a differential, and that's why when the lines cross, you cross down below the zero line into negative territory because the fast line's below there. And so what like all trend indicators, it's not perfect. It certainly has its share of whipsaw signals, but it does pretty early on help define and capture the larger trends. So in other words, if you just traded this alone and nothing else and went long every time you got a buy signal, meaning you crossed the averages, gave you what they call a golden cross when the slow average moves above the fast average, or the faster moving average goes above the slower. In this case, the 50 crosses the 200-day, and then you sell your longs or go short or go short across. You can see that it captured. This was the bear market back in 2000, after the dot-com bubble, and that's where the line crossed, and then the buy signal was here. So it pretty much got you out of either of your longs or into shorts for most of that bear market there. You had that's not a whipsaw. It was a small signal. It lasted for a few months, probably 3 months. Doesn't look like much because the scaling on this chart, unfortunately, I can't do log scaling, stockcharts.com on the chart below, but there was a noticeable drop. I'm going to guess it's probably 10% or more. It was right here at this period for a couple months there. But again, when you have a 70% bear market here, and here's the 2009. This was a 55% bear market. It doesn't look like much because of the big move the Nasdaq made back here. But this is the Nasdaq 100, by the way, not the composite. And that's it. So you can see back here in 2008, there's the last bear market, 2007 to 2008. It gave you a sell signal early on, had a little whipsaw buy signal, but then went back to a sell signal right here at this point, and then got you out of the out of your longs or in shorts through the biggest part of that drop right there, heading into the March 2009 lows, and then pretty much told you smooth sailing. That trend indicator remained bullish and long throughout almost the entire bull market since the lows. Had a little whipsaw there. That is what I would consider a whipsaw, because by the time it triggered, most of the move was gone. Now it actually almost triggered there, so you got to watch it. Sometimes these things kiss. Here we had a sell signal, and it caught a little bit of the drop left back in December of 2018. And I just want to point out, there we are today. Should we any more downside, you can see we're almost flat on the histogram. We'll get that signal. So will it be another case where it comes down here in kisses? See, what happens is those EMAs, the 200 often acts as support for the 50 when it's above or below. So you can see when you get above and you come in, you back test. In a bull market, that will often act as support. And so will that be the case now, or do we look something like this? I can tell you the downward trajectory, or the angle right now, the slope of this 50, it's coming down hard. Certainly possible to do that, but with the momentum, it looks like it'll probably at least cut on through there. But we'll see. It again, it's just one of many things you want to look at, so really where we're going back to today is, let's see what happens. The market's at pretty significant resistance. There's that level I was talking about before, about 194 and change, and that was a very important level back here. Broke out and was a catalyst for this strong rip up here. And then on the way down, remember, we had 3 consecutive days where we tested that level right there. And finally, when it couldn't hold, boom, big impulsive drop, came in for a back test. So this is, telling us we're in a bearish trend. You had a shorting op there, was pointed out at the time. We recently hit it again there, and we're there now. So who knows, maybe third time's the charm. Maybe this will just give us one more time. Like I said, it is certainly objective. I said that this morning. I'll say it again. No guarantees, but this is where I'm much more interested shorting here today than I would be last week when we're at support, when we were holding support, waiting for those support levels to break. So this is where it's certainly objective. You have a much more favorable risk-reward ratio if you put your stop not too far above for either a new short or an add-on. And if you're bullish, you want to see that level break out, but you still have a trio of very important moving averages above. Like I said, the 200-day simple, the 200-day exponential, and the 50-day exponential moving average, all coming in likely to act as a confluence of resistance, because a lot of traders will target bounce backs to those levels to short, just like we had it right there. Let me just show you. When we took out the 200 exponential right there, we took it out this day, bounced back, and that was a perfect shorting entry right there. And I pointed that out at the time, the bounce back to the 200. And then here, some traders focus on the 200 simple. That's why I have them both on my chart, because I think one's better than the other. I lean towards, I like the 200 EMA, but I don't care if half the traders are going long in the 200 simple and then shorting bounces back to it, then heck, might as well watch it. And the fact they all come in together, all the better. So what am I trying to say here? It seems that's about a 2.5% upside. And should we fail here and take another leg down, this is the same support we were flirting with last week there, about 181.17. Just to move back to that level alone would be a downside of about, get that line on there, about almost 7%. And of course, if this is just a bear market rally and there's another leg to come that's going to test or even undercut those recent lows, then you're talking, much greater gain potential on a short. So if you're long, or if you're bullish, then you, at the very least, you want to wait and see this recent high get taken out from March 31st right there. Last time we failed at this level, and maybe add on if you take that out. I'll tell you what I think's going on right now. I know that, watch the headlines over the weekend. They're talking about, the projected peak in the U.S. coming up in the next couple of weeks. I think a lot of people are trading on that. See, I've already said this. Coronavirus can go away. It's not going to go away right away, but I mean they can come out with a treatment, a cure, or maybe an abatement in the moderation in the number of new cases. Maybe even turn the corner, like they're saying, if it peaks. That's what that is. Where number of new cases will then hit a peak and we'll start tapering off. But we're still over a year away from a vaccine. And no matter what, we're going to have to continue to some degree or another social distancing. It's going to continue to have an impact, and this is where I'm going with corporate earnings. So for all the reasons I mentioned, I added, Costco was a new short trade today. There's other companies out there, and we're seeing the same thing. I'm thinking it's, what's going on. Home Depot, I had to go up there for something the other day. They've got, they're letting just a small amount of people in the store at a time. The store hours were reduced to 6 p.m. I think about a week and a half, 2 weeks ago maybe. So not only they cut back on their hours, they do that because they're closing down. Employees then have to sanitize the store. That's what's going on. This is additional costs for these companies, to pay the employees to come in, clean the store, do all this, get all this stuff ready, go outside. They had the lines. They only let a certain number of people in. They had tape marked about every 7 feet, so you had to wait in a line. One person leaves the store, another comes in. You're walking into pretty much an empty store. Yeah, they're doing online orders in-store pickup, sure. But I'm just using one example of many. So, and then as I said with Costco, I think what we're seeing here, I think a lot of people are saying, "Wow, Costco, look at that! Look at lines coming out the door." Same story. They're letting in a very limited amount of people, cutting back on their hours, and I suspect that we'll hear about it. Might be a little while before the earnings come out, or maybe the street will start to pick up on it. I think you'll see an overall significant drop in profits. You can sell all the toilet paper and bread in the world because that's what people are buying right now, staple items, and they're stocking up. And as I also talked about before, I didn't mention in that post, all this stockpiling of toilet paper and maybe not so much hand sanitizer, because you do end up using that a little more than you normally right now. But most other things like toilet paper and all that, it's a front end increase in demand for a back end drop off. They're just everybody is shelf stocking right now. And so, and again, they're going into Costco. If they're going to wait in that 30-minute or whatever line, I haven't been in there yet. I have to imagine it's at least a half-hour wait time to get into the store. I'm pretty sure they're not going around buying the Fiji vacation package, in that little kiosk up front, or buying the 86-inch big screen TV. They're just stocking up on whatever they can grab for the staples. And again, those are low-margin items. That's where I'm going with that. So you have the additional expense. Costco, limiting their in-store purchases. And like I said, Costco, part of their business model, I'm a big fan of Costco. You go in there, and it's different because it's something different every time. You walk into the store, at least me, and I walk out, I have a plan to go in to buy a few things, and I end up walking out with this $500 piece of furniture for my living room, or this fancy thing, because they always have something new there. And that's their business model. They find these deals, they put them in the warehouses on the floor, and you get a lot of impulse buys on higher margin items, and that I'm pretty sure I would have to imagine there's a substantial drop off in that. So again, and then just magnify that by other companies out there. I'm seeing a lot of retailers, Walmart, near all-time highs. So is what's going on with coronavirus? Is it a net positive to Walmart? Is it going to increase revenues that much? It's going to offset all the extra expenses that they have to clean the stores, to manage what's going on there. I don't know what they're doing as far as limiting people in. I heard they're doing something along those lines here down in Southwest Florida, but anyway, so that's all fundamental ramblings. We'll see if it pans out or not. But the point I wanted to make is, again, I think you can see, and we will see, at some point an abatement. It can't keep at this rate, or things are going to just collapse in this country. And I don't think that's going to happen. I don't see outright, utter collapse of the whole, U.S. economy and financial system. So I do think people will start to take it serious, do a little more social distancing, kind of slow the spread, and maybe even turn the corner of that. But again, then until this thing, is no longer a risk, no longer contagious where it can kill people, you're going to still have a lot of that going on to some or lesser or greater extent. That whole social distancing thing and the impact again on a lot of businesses here in the U.S. So fundamentally, I already went over those all the levels today, and I'm sorry, technically in the charts, the Fibonacci retracements and all that, but I just wanted to bring that up. So now let's go to trade ideas real quick. Costco, we just entered about this same price here, so there's really no update to be had on that. That's about where our entry price was. And just to be clear, I did use the weekly chart here on Costco. This is a long-term, to me, a longer-term trade idea. Costco is just off the all-time highs. 7% off its all-time highs. So you have to ask yourself, is this going to be, this whole coronavirus thing, a net positive for the economy and for Costco, or at least just for Costco, and to a big part the economy, because Costco is a top holding. I know at least in the Nasdaq 100, I believe in the S&P 500, right up there. It's I think within the top 10 or 15, somewhere up the line. And you have to ask yourself, should this company be trading still right within, spitting distance of all-time highs right now, if everything I just said pans out? Maybe I'm completely wrong. Maybe people keep their memberships even though they're getting laid off from work, or business owners are seeing a huge decline in their profits. Maybe they continue to keep their Costco membership going, or maybe they drop off. I mean, we can just scroll back here. In 2009, we had a recession. Started in 2007 into the 2009 lows, I should say. And at that point in time, Costco fell almost 50%. I'm going to have to say that's reflective of membership cancellations, decline in profits and revenues, and of course, just overall selling, because we're in a bear market, and just as all ships are lifted in a rising tide, all ships will fall in a falling tide, meaning index companies get sold down with everything else. So anywho, that's that. Let's just take a look at some of the other things. Go back to that list here. Okay, so Costco we just entered, so we can't really say win or lose. And this also, I wanted to get into kind of my theme of diversifying, trying to add more and more trade ideas here. These are the official. I'll go over some of the unofficial trade ideas. Gold's up 2.4%, so we definitely get a check mark there. I'll get to that chart in a second. Our sugar trade, SSG, is up 1.3. LQD is down. I mean, it's up, but that's a short trade, so there's an X for us today. Corn is down 0.8%, so we'll give an X. Palladium is a short trade, and that's down 2%. So overall, looks like our losing trades. SSG, remember, this is the official proxy for the semi-short, but it's 2-time leverage. So I only have a half position size adjustment on that, 50% or so, beta adjustment, I believe it is on that. So that's really half that loss. So it's a big hit, but it's still within our stops. And remember, we were profitable. So what we're doing today is most of that is just a profit give back. So there it is. So it's a wash today overall, from number of winners and losers. And let's go over these. Let's start with gold, since I mentioned that one. GLD, to continue to maintain gold's in a bull market, and we it's trading well to the technicals. That's kind of a messy chart. Where's our official trade? Should be right here. T3 is hit. I need to do an update here. I'll send that out. I still have to update some of the long trades that have already been completed and haven't been updated yet. So anyways, we hit our gold GLD target today, 156.10. Third target. Remember, I added, I told you I would before we got there, most likely add an additional target at 172.55, longer term target. And zooming down to the 60-minute chart that I highlighted recently, right here, pointed out we had a couple things happen in gold. We first broke out above this downtrend line, nice clean trend line there, after pulling back to the 115.77 support level, nice support, and then we had this impulsive move up, led to this bull flag continuation pattern, broke out, and boom, nice leg up there too. So that's gold. Now it needs to take out, these are gold futures, of course, GC, 60-minute chart. If I don't make mention, it's always up here in the left-hand corner, both the symbol and the time frame we're working off of. So that's it. So the big level now, at this point in time, let me put a line there. It's not a hard level, but we do have two highs right about here. You want to give it the benefit of the doubt, let the second of the two be taken out. That's about 1730, 1720 or so. And you can see it's pretty much where gold has been. We've had several runs up or at or near that level for a while here. So a breakout above that would certainly be bullish. And as of now, everything looks good. Of course, it's getting a little extended today, but I don't see anything in the chart that says, close out the position. Okay, next up, let's look at our sugar trade, SGG, sugar ETN, and that would be right here. Here we go, divergent low. Should be confirmed soon, a little more upside. The PPO should cross over, give us a bullish crossover there, confirming that divergence right there. Remember, we already hit the first target, was hit the day we entered, had a quick pop up. And let's see, let's look at the futures on that SB. If I can find it down here. There we go. All right, so just waiting for another run up at that trend line, and this wedge looks ready to pop. I'm referring to this larger bullish falling wedge pattern. We had the small wedge right there down trend line. That was a catalyst for that pop up there. We took this one in anticipation of the breakout of that smaller wedge, and so far so good. We had a quick pop up that hit the first price target on SGG, the official proxy, sugar ETN, pulled back to made a perfect back test of the trend line, and we're just kind of, looks like we're basing here, consolidating underneath there, and so we need a break of this trend line, and then of course that 1073 resistance level, and that should open the door for a move up there to about the 1170 level on sugar. And that would be, if so, from where we're at now, looking about another 13% run if we can get there. Which brings me back to the SGG trade. I may revise and add a revised T2 down here, make that T3, because a 13% run from where we're at in SGG would take us up to, that's why I look at the futures. The futures are, to me, if I had to look at only one of the two or trade only one of the two, it would be futures. So that's going to probably take us up about this point here. We'll see. I'll keep an eye on the futures, and I encourage you to as well. If you have, most brokers, TD Ameritrade will give you futures charts. I believe, I don't know if they'll quote SB. Some of the ag commodities they don't provide quotes on, some they do. If not, investing.com will give you a free real-time quotes on sugar futures or just about any other contract. Next up, LQD. Nothing really to update. It's actually up today, but still right around where we entered the last time around. We've had two profitable and successful swing shorts on this. We're in the third right now. We entered somewhere around here. T1 remains 119.79. T2 remains 113.52, and I still, very much like this trade, just like the market. I said a couple weeks ago we might grind around for a little bit here in the stock market, bounce back and forth. That's what we're doing. LQD is going to do the same thing until the market takes another leg down. We probably won't see LQD take a leg down, but there are no guarantees, and this one will just trade on its own technicals. There's our stop. There's our first target, second target, with the potential to add additional targets depending on what goes on in the market. Next one up is corn. Corn is down today about 0.8%. Still setting up, went into this one kind of in anticipation of a breakout here, or a reversal, and still looks good. Just need to see some kind of catalyst, need to see it get going here. Let's look at futures real quick. Let's see, that's wheat. There we go. ZC, corn futures. Need to take out this downtrend line. It's nice and clean. There's your divergence right there, positive divergence. Potential, we need to turn up here so we can get this PPO to turn back up and confirm that divergence. And then you can see probably this is the first significant level. Here's a trend line that's extended, but 365.55 is the very, very big level. You can see there it's was defined by, I think, these three lows right there. Finally we broke it, had a sharp move down once that level gave way. So that is certainly likely to act as resistance on the way up. And for you futures traders, if you're an active trader, that's certainly a level to maybe book some profits on and recycle back in on a pullback. And then I do think it'll get taken out and eventually head up to some of these higher levels there. Next up, palladium. So far so good. Here's that 210.77 support we shorted just below. We went short on entry on a break below 207, so we're at 201.75 now. So moving lower after the breakdown of that. Really, it's that 210.77 support that was pretty key. Coming up here on the first target, we'll be at still at 195.55, and PPO is starting to curl over down at the signal line there. Let's look at palladium futures, and nope, that would be platinum. Here's palladium futures. Needs a little bit of work. Symbols PA. You had the comparable support levels at about 21.16 right there. We are below it, but what's going on here is you have this trend line to contend with. So we need to take out that trend line, and that if and when that happens, that should open the door for a move down here to that 1773 level, and quite likely some of these additional targets. PPOs also looks like it's starting to curl down right at the zero line as well. And then SGG, that's the two-time leveraged semiconductor short. We already hit our first target there, had a reaction around that level, pulled back, but we're still above the above the stop for now. Stop is on a daily close below 1170, and if you see here, I extend that perfect back test of the trend line. So this meshes with the markets and a lot of sectors and stocks being at resistance. So we have a nice back test, which offers an objective add-on or new short entry. Or well, remember to short the semis, you go long these two-time inverse ETFs. So there would be a long entry on SSG here. You could even use the same stop. It's tight stop. It would be a relatively tight stop there. Daily close. It's so hard to say where exactly that stop point will be, but you're talking maybe 3% with a potential upside there of about 70%. And that's that potential third target. But if T2 is hit, that would be about a 45%. So again, just a very, very attractive risk-reward ratio. Okay, and recently in the ag commodity arena, one of the ones I highlighted as my favorite, and I was going to add that one on. It's a matter, we already have two, but I may add this one still, is cocoa. The charts continue to firm up. Cocoa had this uptrend line here, the CC, or the cocoa futures. And then I pointed out recently this 2300 is a pretty big level right there, so you could see this more of a, like an ascending triangle pattern, they call this in trading right here. You have that line there, and the uptrend line forms an ascending triangle pattern. It's an inherently bullish pattern. We had a breakout today above 2300, and in one fell swoop it popped up, hit that 2349 resistance level defined by these reaction highs. If it can pop through there, I don't see really much stopping it. There's a little gap right here. Might come into play, but I see it coming all the way up here to about 25. That 2500-ish level, and that's about another 6% or so if it gets there. And the ETN for that is NIB right there. So that's NIB today. And again, I was highlighting NIB as an objective long entry here off this trend line right there. So you had multiple 1, 2, 3, 4, now 5 successful reversals. Like I said before, it's just a simple wash, rinse, repeat thing. Go long, pullbacks to the trend line, and this time around, again, this is a busy chart. I have old levels from old trades on here, you can see, but I think we're probably good all the way up here to at least that 3140 level, quite possibly this longer term target zone that I had from way back here. Could easily see that happening. And again, because we're looking at this, I don't want to call it an uptrend, but a larger, bigger picture here. Let me turn off all the lines because I know that looks like a Christmas tree with all those colors on there. Bigger picture, it's setting up in a comparable symmetrical or ascending triangle pattern here. when you look at it this way on the daily time frame. There's NIB like that right there, and that's also pretty good. That support resistance line I have here, that long-term target zone with support back here, by the way, and that's all the way up to about 35.80. So more upside, I think, in NIB, but again, it needs to clear that level we're at right now. It's starting to pop above on CC on the futures, but a little more work there to be done. And then CL, crude futures, I mentioned that Friday as an objective short, and also listed SCO as one way to do it. Staying clear right now, trying to stay clear of those 3-time leverage ETFs with all the volatility in the markets. There's still risk with the 2-time, but less, I think. So this was a 28.47 level. It was recommended, provide an objective short entry, and I had a initial pullback target here. Again, that was on the front page. I showed it on Friday going like this, going down here, hitting that trend line and that 25.19 resistance sub-target, initial target, bouncing from there, which it did. So that gave you an opportunity to get a quick 9 or I don't know what it was, 9-10% pullback on a short trade, cover, go long, game the bounce, and then get short again. And then we had an additional buy signal since I posted that update this morning on the homepage with a breakdown below this more significant, the trend line, which really forms this rising wedge pattern. So for crude, still looking for another run to at least that 25.19 level, and quite possibly down here that 24.22 level right there. And then finally, NG. NG I posted last week in the trading room. I think it was on Friday. Yeah, that was Friday. Posted before there, and then it broke out above this downtrend line right there. Hit that first, you had 1,612 resistance, and the trend line. That was on Friday, and I think it went up that same day. Yeah, it did. That was, oh no, this is today's chart, but it did, that day it did pop up. So as I said, it did run up to the trend line. Right here, where it then consolidated right on that trend line, broke out, ran up to that next target, or that 17. It wasn't the next one. It was one of the targets I had at 1705 right there. Made a perfect back test. I mean, this is just a beautiful display of technical analysis. Breakout, rally to resistance, pull back, perfect back test of the trend line, offering another objective long entry and another thrust up to the 1705 level. And this was posted this morning with the next buy signal coming a break of that level to take us up to 1778. And remember, the catalyst, you had big divergence right here, bullish divergence right there on the indicators. And okay, and you can see now we took out that 1705 level, which opens the door for a move up there to that 1778 level. We're up on the day almost 8%. So since it was posted here on Friday, that's about what is that good for? About 11% rally so far, close to it in natural gas. And of course, that's an unofficial trade. If you want to trade, there's a couple ways to do it. Again, I would avoid DGAS and UGAS now. We usually, in the past, we've used those. DGAS is to go short, UGAS to go long. They're working today. It's up, 18.5%. But you can go with UNG if you're concerned about the leverage, and that's more of a pure play right there. It's an ETN, so there's going to be risk there as well. But if you don't trade futures, and the other option too, if you do trade futures, do QG would be natural gas. That's the mini contract. So instead of NG, letter Q, that's not my line tool. I can't draw here, but it would be a QG. I believe you want to double check that, but I think that's the mini contract for natural gas futures right there. Okay, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.